The Sensex and the Nifty regained the losses of last week to see gains of over 1.5% this week. Basically, last 2 weeks, the markets haven't gone anywhere. The Nifty Bank and Mid Caps outperformed this week, though. Hello and welcome to a fresh new edition of Taking Stock, the show where we review the week gone by and prepare you, more importantly, for the week which is in front of us. We cover fundamentals and get you a technical view as well. I'm Prashant. With me, as always, my colleague Surabhi Upadhyay. Hi, Surabhi.
Hi, Prashant. Yes, the index didn't move, but there were parts of the market that were moving around for sure. And of course, we're getting into the festive weekend. So we start off by wishing all our viewers a wonderful end to the Navratri period and a very, very happy Dussehra as well. Well, plenty to cover on the show this week. We have opinion coming in from Ashwini Agarwal, co-founder and partner at Ashmore Investment Management India. He joins in to give us some sense on the way the market is set up right now. We also get you a technical perspective with Anu Jain of IIFL Private Wealth Management. That's not all. We have a whole host of market opinion that we gathered during the course of the week. So you'll hear voices like Kenneth Andrade of Old Bridge Capital Management, Vetri Subramaniam of UTI AMC, and Tushar Pradhan, HSBC Global AMC, as well as Prateek Gupta of Kotak Securities. Now, before we get to all of that analysis, let's quickly rewind what we saw in the last 5 trading sessions. So essentially, I would say it's perhaps been the catch-up trade this week, because at the index level, the Nifty did find it extremely difficult to get past the hurdle of 12,000. We seem to be getting stuck around that zone of 11,950 thereabouts, but go beyond and then you see the way the underperformers started catching up. When by that I mean the banking part of the market and also mid caps, and that's evident in the manner in which the indices are stacked up. So if you look at the gains of the week, the Nifty is up hardly 1.5%, but look at the Bank Nifty, it's up 4%. By the way, on a monthly basis, that segregation is even more stark. The Nifty is up 6%, the Bank Nifty is up 14% for the month. The mid cap index this week finally decided to come to the party with a gain of almost 3%. The other thing that stood out, earnings, because that's what we are really talking about of late. And it's been more hits than misses, you would have to say, more positive surprises. Cement companies were actually really blowing past some of the estimates. Ambuja, ACC, most of those numbers are very, very positive. You can argue on valuations. We saw a very handsome beat by Asian Paints as well. Bajaj Auto was on expected lines, so no nasty surprises over there. In fact, the only miss perhaps can be Britannia. If we talk about this week's earnings action. The other sort of question mark that's coming up is on financials, which is a more muddled picture. SBI card became a big talking point, and that threw up questions around what's happening with retail unsecured loans and whether delinquencies are going to be on the rise. So, you know, that's a bit of a question at the moment. But then look at the housing finance side. Housing finance companies are in brisk demand because there's some evidence, some data points that are suggesting that the property market on the housing side, that seems to be stirring back to life. So those are some of the highlights, the talking points. But let's get more stock specific. Agam joins in on the action that we've seen this week.
Well, Surabhi, it was a choppy week, but one with gains. And as you've already mentioned, we did see a 1.5% gain for the benchmark indices. That would include something like the Nifty. The Sensex, in fact, outperformed. We did see that move up around 1.8%, but it was the Bank Nifty clearly the winner among these indices, advancing by nearly 4%. Now, let's talk about the big index gainers. It was broad-based across sectors. So we did have the likes of Bharti Airtel advancing by as much as 8% and over 7% gains for Tata Steel, NTPC, Axis Bank or Tata Motors for that matter. On the losing end, we did see the likes of Britannia react to earnings. We had Hero MotoCorp looking at a bout of profit taking and about 4 to 5% declines for Divi's Laboratories and Eicher Motors as well. Let's move on and talk about the broader markets too. And, you know, we have Himmat Singh Seed, JK Tires again reacting to earnings. A lot of outperformance here, up as much as 26% each. 20% gains for AB Fashion Retail on that stake sale to Flipkart. And we saw Sri Digvijay also moving in tandem with a lot of the other cement companies. On the losing end, well, we have a lot of weakness in SBI Cars, down 8%, and some losses for Coforge and Biocon as well. So we continue to keep an eye on some of these big movers as we move to next week as well.
Agam, thanks very much for that. So that's basically what we're watching out for as far as stocks are concerned. Let me just quickly run through, what basically happened as far as the week is concerned. And more importantly, look ahead a little bit. The focus very much for the market remains progress on the US fiscal deal. We've heard voices and commentary from top officials in the House and the Senate, and the Senate in the US saying that, well, we are quote unquote just about there. Can we see something over the weekend when we come back on Monday? Will we see progress? That will, I mean, if there is progress, that will surely cheer up the market. And that's the only thing, actually, because if you look beyond that, what you've got basically is elections. And, the final debate did not do very much for markets per se. But the fact is that, the lead that Joe Biden enjoys over Donald Trump is still pretty respectable at about 7.5 odd points or so. This is, of course, an average of polls out there, and so close to election. I mean, many do believe in the markets that it's going to be very, very difficult for President Trump to close that gap. So for now, the market seems to be going with what many are calling a bit of a sweep, blue sweep, really. And the market seems to be pretty okay with it. Near term, I think for our markets here, the level to watch is basically 12,025. That was basically the high which was made last Thursday. It's the recent swing high from where the market is corrected to 11,930 or so. And I think beyond 12,025, one does get a sense of visibility in terms of more gains. I mean, technically speaking, beyond 12,025, you basically clear all the way to about 12,800. It's never as clear, it's never as sure, it's never 100%, but that's basically what charts are telling us. Let's quickly get some perspective on fundamentals, really, from here. Ashwini Agarwal, co-founder and partner, Ashmore Investment Management, is joining us to tell us what he's making of things. Ashwini, thanks very much. It's been a while. Glad you're coming back on the show. Your first thoughts, Ashwini. Are things looking pretty clear in terms of potential for further gains, given the recovery in economic data, etc. we are seeing? Numbers for the second quarter so far are also supportive.
Hi, Prashant. So first things first, obviously the earnings season is turning out well, but the early part of the earnings season is usually quite decent. So I'm going to hold out on that one. We'll have to see how on average things pan out. But incrementally, if you look at a lot of the data points that have been coming through over the last couple of months, everything points to an economic recovery. The question we have to ask is this really a pent-up demand and a little bit of festive cheer? And will the demand hold up post the festival season? And to this extent, I'm hoping that, what the finance minister said earlier this week, or what the chief economic advisor also said at a different forum a couple of days ago, if the government provides more stimulus here in India, that holds up demand beyond the festive season, because I'm a little worried about that, given all the loss of income that's happened in urban India. But yes, for now, everything, at least all the data points, have been quite supportive.
Okay, so that is good to know that data points are supporting this. Ashwini, great to have you on the shows as always. I also want to get your view in on the fact that we're getting into an interesting market where at the index level, things aren't really moving higher. But there's a lot of interest that seems to be coming in mid-caps now. Is this something that's here to stay?
So, Surabhi, one very interesting thing that at least, I would highlight again, and I'm sure all your viewers have noticed it more than amply, is the fact that despite the beat in the numbers, IT stocks didn't do much last week. Across the board, we had a significant beat on the IT stocks, and the stocks didn't do much. And on the other hand, we saw the financials rally, we saw the telecom rally this week, where numbers haven't come out, or the jury is still out as to what happens next. So obviously, I think the positioning of investors in different areas is as pertinent as the numbers are. So from that perspective, returning to the question, whether it's mid caps and small caps, again, if you take the whole year into account, the fall that the mid caps and the small caps have had over the last 2 years has been very, very nasty. So if you look at the Nifty, for example, we are nearly back to the highs that we had tested in 2019, 12,000 odd on the Nifty, whereas the mid and small cap indices are still behind between 20 and 35%, depending upon which index you look at. If you make an assumption that the economy is coming back, if you make an assumption that liquidity is going to be plenty, which every commentator in the world seems to be pointing towards, and RBI is clearly supporting that, then I think it would make sense to build an assumption that the underperformers may have the ability to catch up. Of course, we would have to look for fundamental support in terms of earnings outlook as well. So it's not going to be that every stock will participate, but I would imagine that stuff that has lagged behind will find favor, assuming the earnings hold up for these companies.
Ashwini, so do you believe this is now we're in the, I mean, some believe that this is the last one big hurrah is left on the market. Do you think about the market like that? Or do you think, well, things are back to 80-90% across industries? The market is back, has retraced almost 90%. So it's almost been like to like, right? Actually, it's not been like to like, but for the sake of simplicity, I'm just putting those numbers out. Do you think this is looking good as we head into 2021?
So, Prashant, it's very difficult to call, right? If you think about it, I've been on your show so many times, and we've spoken about pharma over the last 2 years. Who would have thought that last 6 months the pharma stocks would do what they did, right? Let's take IT, for example. You've seen the numbers in IT names, very, very solid. Across the board, IT companies are saying that we are in for a wave which should last for 3 to 4 years. And if you look at earnings for IT companies, 15 to 20%, consistent, growing over 3 to 4 years in the foreseeable future, with very high EBITDA to cash conversion, with very high dividend payouts, who's to say that these stocks are fairly valued? I mean, if you go back and see the consumer stocks with similar kind of earnings profile have traded at much higher multiples. So, the multiple that the market is willing to assign to a set of earnings for a particular sector keeps changing from time to time. So it's very hard to say that this is the last hurrah for the market. I have been terrible at forecasting where Nifty is going to begin with, so I wouldn't be able to comment on that at all. But what I do find supportive is that earnings in many areas are supportive. The visibility to earnings in several instances is quite strong. Easy liquidity appears to be here to stay. And what I worry about is simply that will the urban consumer demand in India hold up or will fade away post the festival season? So, these are the variables I think about. I mean, I really don't know if, Nifty will take a tumble from here or if it will go to new highs. I mean, that's just beyond, my comprehension, honestly.
So, Ashwini, the point that you made on IT, you hit the nail on the head because that's what I've been thinking through the week as well. The same thing happened with cement. You've had these blowout numbers from ACC and Ambuja. Stocks didn't go higher. Same thing happened with Asian Paints. I mean, the best performance in 30 quarters on margins. So is that telling us something? Because you could have the valuation argument, but this market goes higher and higher and tosses valuations out of the window when it wants to. But it's not doing that right now.
So it's positioning, right? So if people were positioned, or the whole investor community, which includes institutions and includes retail investors and it includes the day traders, if the whole market is positioned for an outcome and that outcome happens, the market doesn't reward that outcome because it's already priced in. So the question, therefore, to ask is that where is the market positioned? So clearly, the market is positioned in these defensive names, and that's what the results and the reaction to the results is showing us. At the same time, I mean, where there are genuine surprises, I think there will be more traction. Also, sometimes what happens is, at least in my experience, so, in the week immediately after the results, these stocks might not do much. But, as the short-term kind of momentum, story plays itself out, the fundamentals can take over. And I find the fundamentals in the case of IT, for example, reasonably supportive. I mean, valuations are not expensive. I mean, you can pick out a couple of stocks which might look expensive, but across the board, they're not expensive. So my hope is that eventually fundamentals will catch up. In the short term, it's positioning. in the long term, its fundamentals is how I think about it.
Ashwini, it's a pleasure always. Thank you very much for speaking with us here at CNBC TV18. And have a great weekend. Have a great festive season as well from all of us here at
Thank you.
Network. Thank you. All right, that's the fundamental view coming in from Ashwini Agarwal at Ashmore. We'll take a very quick break here from fundamentals to technicals, looking at charts. Anu Jain of IIFL Wealth Management will be on the show in just a bit.
From the bottom, I think everything seems to be back to where it started off. The last couple of days or the last couple of weeks, yes, it has narrowed down to a couple of segments or sectors of the market where the news flow is fairly positive. And in the near term, the numbers also in those particular sectors look reasonably okay. While the numbers look very good at this point in time, if you look on a 6-monthly average, they're still down. And on the 9-month, they'll still be down. But companies that will do well, I think you probably have to look at it from a yearly basis. And there are early signs to show that there are some industries and some companies that will actually close positive even on a yearly basis.
Market valuations that we have today, then financials certainly sticks out in terms of the fact that, after being one of the worst performing sectors during the sell-off in March and April, it's actually continued to be one of the worst performing sectors. So from a valuation perspective, I think certainly there is some degree of positive support for the sector. I also think what's happened is that you have seen a lot of these institutions go out and raise capital. So unlike in the past where there have been fears over non-performing assets and the banks have actually gone and raised money pretty late into the recognition cycle, this time around they've already raised the capital well in advance of any potential problems.
Market is at a very, very, I would say, confusing state. And when is it not? But clearly the valuations have now almost reverted to where it was pre-COVID. Knowing that FY21 earnings are nowhere near the estimate that we were in February before it all began. So in the face of an absolute wipeout in earnings for this current year, having the market exactly where it is when it all began is very confusing. The earnings will come back, the economy will limp back, but what is the speed at which it will do? My favorite concern here is that it's not going to be a uniform recovery.
Okay, welcome back. So you heard Ashwini Agarwal of Ashmore on fundamentals. We're looking at the week ahead. Now let's get to technicals. Anu Jain, Senior Partner at IIFL Private Wealth Management is with us. Anu, thanks for your time. Good to have you here. Are you seeing a little bit of a correction going ahead? It's been pretty choppy last 2 weeks.
Hi, good evening, Prashant. I think this choppiness is now because you are at the, cusp of the US elections. You're fully valued, a lot of triggers, but no real reaction because you're in resistance zone. So I think it's going to stay choppy. I'm not really seeing a correction till you really break 11,665 on the Nifty. But yeah, you're going to have some choppy times between this 11,800 to 12,100 zone.
Okay. Anu, hi, good to have you on the show. So what do you make of the catch-up rally? It's been a big move on financials all through this month. Do you see more steam here? And is this a good trade to be on?
So just like the Nifty crossed 10,800 and, crossed the 200-day moving average, and technically it became a buy, you have the Bank Nifty cross 23,500 and hold that for a substantial period of time. In August end, we had traced back to 25,200. If we were to look at technicals, the possible target is 26,300. You are right now around that 24,500. You're facing resistance. But if you were to cross 25,200, which is the resistance zone, you can possibly scale up to that. And there is no real, I would say, till we don't break 23,500 on the downside, I won't give up on the trade for some time. So you are in a zone. I won't say, yes, you've broken out of the 23,500, but right now 24,500 is where you are. You can go up to another 26,300, which is roughly about 7-8% from here.
Okay, in a way, I know you're saying on Nifty and Bank Nifty maybe a little maxed out here, at least in the very near term. You've got a couple of trading ideas, I don't know if you can outline them, and all of them are laggards, Hindustan Zinc, HPCL, ITC.
So there are a couple of things that we're looking on. We're looking at the dollar index, and we feel that there may be a play on the emerging markets for some more time. And given that, you may see metal stocks do well. And because of that, the first choice is Hindustan Zinc. As I said, I'm finding the main stocks really, maxed out. And that doesn't give you the confidence to take a fresh trade on any on them. On Hindustan Zinc, where it is right now on the weekly time frame, the stock has given a positive confirmation for a break from the downward trend line. It's also supported by the RSI. So we basically using that. I think a period of about a month or 15 days to 20 days, you can see closer to 275. If the whole metal index kind of goes in the same support, we saw Tata Steel kind of give that move today. JSW results were good. So at this 238, 240 levels, I think with a stop loss closer to 220, we would play it for about 275. This is a swing trade. This is not a 2 or 3 day trade. So I would do that for that. On the other laggards that we are playing ITC. So ITC has been a non-performer. It's stuck in that 160, 180 zone. We have seen some build-up in the stock over the last couple of days. So we feel that it's near the 20-day moving average. It could test the 190. Downside in this stock is relatively low. So I would say that this is a safe stock for people. The stop loss can be as close as 163. And this could be played for about 185 to 190 levels. And the third is obviously HPCL, which we have seen. BPCL along with it can also be played, but we are looking at both the OMCs to be played for that period. So HPCL is about 178, stop losses closer to 172. I think this can move a minimum of 190, can go to 205. Obviously, any government news on the demerger for BPCL is a positive for both of them. So those are the 3 laggard calls we have.
All right. Okay, Anu. Good talking to you today, and hope to hear more of you in perhaps the weeks and months ahead. You have a good festive season. Well, on that note, we will quickly wind down with some of the important events to watch out for next week. Nupur has that list.
Well, thank you so much for that. Well, we are in the mid of earnings season, and coming week will again be an earnings heavy. Starting from Monday onwards, Kotak Mahindra Bank, SBI Life to report their Q2 earnings, followed by Maharaja Batteries, C8, ICICI Pru Life on Tuesday. Then we have Marico, Cummins, Titan to come up with their Q2 earnings on 28, Canara Bank on 29. And we will end the week with earnings coming from Big Boy Reliance on Friday. Beyond earnings, few events to watch out for. Bihar Assembly elections to begin. 71 constituencies will be going to poll on 28th of October. September core industrial retail will come during the week, and industrial output data, which is important, to come on Friday. From Globe, US consumer confidence detail to pour in during the week. On that, dollar will be in focus. Back to you.
All right, Nupur, thanks very much. Lots of earnings, and of course, there are the US sort of the fiscal deal to watch out for as well. That brings us to a close, Surabhi.
Absolutely. So have a fantastic festive weekend. All your viewers out there, make the most of it, of course, with the right cautions and precaution that you will undertake. It's a wrap from the entire team of Taking Stock. We will see you with the markets again on Monday morning.